Hi, this is Jason Fielder with the Daily Forex Report for September 1st. Got a lot going on in the markets today, even with the U.S. Being closed for Labor Day. We are looking at the U.S.-Japanese yen pair. This pair gapped down on the open and did not retrace the gap as of yet. Still looking for it to do that later in the week. If it does not continue down further, I am looking for this next session's range to be between 108.95 on the higher side, and on the lower side 107.34 is what I'm looking for. I do anticipate us finding some support around this same area where we had previous support. I would not be surprised if the market came down to that point and bounced off of it during this next session. That wouldn't surprise me at all. This pair is moving down, and the bias is to the downside for the most part. I am looking for some resistance to come into the market if it moves higher around the 108.41 area. Looking at the Euro USD pair, this pair also gapped on the open. It gapped up on the open and is moving lower. It has filled that gap, and I anticipate this pair continuing to move lower over the next session. I'm looking for the range to be between 147.55 on the high side, and on the lower side 145.41. So we're about 30 pips from that lower range. I am looking for some support to come into the market around 145.30, so a little bit lower than our range. As far as resistance, looking pretty much at our range top for that. Now let's take a look at the pound US dollar. This we talked about previously. I had mentioned in the previous video yesterday that if we saw a break of the 188 area, that we could see it just cruise on down. It has done so. I'm looking for this range during the next session to be on the higher side, but 181.85, and as you can see, we've already hit the range low, what I anticipate the range low to be for this next session, and that was at 179.33. Now, if the market continues lower, which I anticipate it doing, we should hit some support at around the 177.86, and I'm talking about long term, not this next session. If you're looking to go short, which, you know, if you haven't already, it may be a good opportunity too. But this is the next key level of support that I'm looking for, and after that, if we get through that point, I would look for 1.7617. This second area of support, if you go back history-wise, take a look at it, it's some pretty strong support. The market fluctuated around this number for a good amount of time. So if it continues lower and does reach that point, I anticipate us doing that again. But first, of course, we have to push lower to this point and get through it. So, you know, taking a trade that would basically look to go lower to this number with a you know, stop loss of maybe this week's open would be, you know, would probably be a good bet. Now the odds are that it normally, I would say the odds are that it would retrace our gap that that occurred on the open, but the market has pushed low enough. Now the odds actually flip, and the odds go in the favor of this pair closing down for the week much lower than if it had retraced. Basically, we were looking at this point as a kind of a flipping point. If it goes past that point, then it's, you know, who knows how far and how fast it's going to drop. Now, taking a look at the Swiss, this pair also gapped down on the open. If you notice, we had a close here and it opened here. It has retraced that gap. It's pretty much still moving sideways. The bias is to the upside though. I'm looking for the range to be between 110.80 and on the lower side 109.19. Now, as far as support and resistance goes, I'm looking for some resistance at 110.50, which we've seen that before, and for some support, looking for 0.950, and we've also seen this area of support before. Now looking ahead, have quite a few news announcements coming out this next session at 12:30 a.m. Eastern Time. Later today, we have the Australians releasing their rate decision. The Reserve Bank of Australia rate decision is being released, and the consensus is that they're going to drop their interest rate from 7.25 down to 7%. So if you want to take a look at that, if they do actually drop it, we could see a sizable drop in the Australian dollar yen pair. So you may want to take a look at that. If they drop it more than to the 7% level, you can definitely count on that dropping. Now the Swiss have their CPI for August being released. The consensus for the month is that it's up from negative 0.4% to negative 0.1%. Year to date, they're anticipating it being even at 3.1%. Now they also have their GDP being released for the second quarter, and the consensus is that it's down from 0.3% to 0.2%. Year to date, it's down from 3% to 2.4%, and that's all being released at 1:45 a.m. Eastern Time. It's likely that it could have an effect on the market, especially if it's lower than anticipated. Now, the Australians also have their GDP being released, but it's going to be later tomorrow at 9:30 p.m. And the consensus is that year to date it'll be down from 3.6% to 2.9%, which will not be good for the Australian dollar, especially if they lower rates. The second quarter is estimated to be down from 0.6% to 0.4% as well. So definitely keep an eye on the Australian dollar. We could see it just move lower across the board. So that's pretty much it for today. A lot going on, a lot of movement, even with the U.S. being closed, U.S. markets being closed today. So until tomorrow, this is Jason Fielder. Good trading.